Hello guys, and glad to have you on board again today. Yesterday has been a hell of a session for some to navigate. That's also the reason why I have released an entire video about psychological management and trying to avoid one of the general mistakes that could have been done in such a context. But still, despite that, today we're going to restore the usual updates we've made so far, and we're going to go and talk much more about technicals than the psychological management itself. So considering that it's been said yesterday, of course, still has a lot of value. Today we're going to see what technicals tells us about the probabilities ahead. So we just go right back into pure raw technicals and tradable perspective, adding up on what's been said yesterday, of course. So, technically speaking, we're going to start with the broad market vision and looking at the crypto total, and then we're going to scroll through some different perspectives, looking at major altcoins, Bitcoin, and see if we have potential disparity into such markets. We're going to have a look at the dominance right after, of course, to try seeing if some things can orientate probabilities ahead. So, first things first, broad market vision, okay? Just like we do for the S&P 500, we're going to have a look at the broad stock market perception. We will now take this recurring process of having a look at the crypto total as a reference entry point for our analysis. Okay, so what we have in here is an overloaded taking profit context, which is basically just telling us that there is probability for a range boundary to build itself. Of course, in here, background scenario still remains the trend we've assessed yesterday. So this means potentially a range boundary is building itself out there. The area in which we have currently rebounced, and don't get me wrong, that just means currently, we're still not yet having a confirmation because we need a candle close, and therefore this won't happen until 2 a.m. on my local time frame, so it's still 17 hours from now. So lots of things could happen today. Only by tonight's candle close I'll be able to forecast what really is the likeliest outcome. So we're going to forecast the probabilities, and so you'll be able to orientate your own assessment throughout the day. But let me be real clear, it really depends on where we close. And lots of things can happen, and we're going to risk manage multiple options, which we're going to describe today. Okay, so we've rebounced out of the trend channel, which means, well, we've had that dip, but we had to try testing it again. We failed so far. We haven't installed a candle close on the context. So it is, for now, a reverse inside the context, closes, and candle always close inside the context, so inside the bullish demanded areas, just like we did last time. So last time was without signal, just because the indicator will never give you a signal into such a stupidly bearish momentum. It is just there are too many protections inside the algorithms that will protect it and prevent it from showing any signals out there, okay? There was definitely an overblown bottom, but still we had to try once again. This time we've got safety signals, which gives us the risk limitation we want to get into buy this market. Of course, I personally have triggered some bullish entries yesterday, very limited stuff, because of course I don't want to make the mistakes I told you not to do yesterday, getting overexposed to the market by using inappropriate margin positions. So I did use margin yesterday because of course I'm not a beginner and I know how to fully handle these things appropriately with good position sizing without risk taking too much, but still risk taking on yesterday's such kind of context was definitely something that I think every experienced traders did. Still, if you did not buy yesterday, just don't blame yourself, okay? It's right not to do such a thing. It's much, much better if you did not, but saved and preserved your capital and decent levels of risk rather than going in and going in blindly, okay? So those who got in yesterday were at least experienced traders, not to say professionals. So most of you guys simply are not. So don't blame yourself and be able to forecast what your current level is and to trade accordingly. That's by far the smartest choice you could make, okay? You're progressing into trading, and that means some people will do things that you're not yet going to be able to do as well. So don't try to copy everyone. Don't try to be the best trader out there. You're just trying to be the best possible trader you could be today, progressing toward what you eventually could turn out to be tomorrow, and that is a long process. Okay, that being said, let's move on back to technicals. Okay, so nice bottoming structure, needing candle closes to confirm, but so far this is real great, and we're reversing inside the context, which gives us probabilities to make new all-time highs later. That means the bulls still have control, as bulls support prices in their expectable areas. Okay, if we were buying with closes below the context, that would mean very likely probabilities to build a range. So do we have reasonable probabilities to go straight up to all-time highs into cryptocurrencies? That's a yes. But that's a broad market vision. That means not necessarily all coins will do such a thing, but there is a definite probability in here in which we just go back to bull trend. And we might have terminated this range into a very ugly structure, because technically you're rarely going to see such a thing. We normally rebound violently and then make a second dip. Okay, we generally make kind of ABC structure. So this could just be the end of the consolidation, and be real clear. And in that perspective, can we surge back to all-time highs in a broad market perspective? I would say that's a big yes, if we consolidate and validate the signal we have now. If we start rising back up, well, we've reversed inside the context, the value hasn't shifted at all, and we have something that looks like an ugly, sure, but still a mature range. Normally we should have gone right up to this trend channel, which I think is kind of an anomaly into our current context. We should have gone there, but we just got suffering an accumulation pattern, a Wyckoff accumulation basically on Bitcoin. So if we use that as our context, and only if we tend to validate these signals by the end of the day, well, in that perspective, yes. Am I back to bullish? I don't fear say yes. And I rarely do such a thing. You know that normally I'm going into shaded gray areas and I will say this is the likeliest outcome, but there's also this less likely scenario, but still a possible one. I rarely go into, well, I have that much confidence to say that probabilities fairly much orientate one scenario rather than the alternative ones. I generally try to give you the whole picture of major probabilities with their respective chances to occur. Which one I favor the most, or which one I trade personally, with what type of context risk limitations and so on, okay? I'm not doing the analyst usual shit, which is basically this can happen and this can happen, but also this, and this, and do your own shit. That's not what I do, okay? I always give you this broad vision of major probabilities, what they could look like, what has to show up in terms of technicals to confirm going this way rather than this one, and what are the probabilities associated with that, but most importantly, which one the fuck I'll trade. Though which one is the likeliest outcome to me, okay? So that being said, depending on today's candle close, I will definitely far increase the probability to go immediately all-time highs with an intermediate risk limitation in here, but very likely not going to be causing any types of drops, just probably sideways action into the trend channel before breaking the third range boundary, probably extending to a 1-to-1 ratio above, okay? So that being said, dominance now is the next thing you need to have a look at, okay? The dominance has retraced right up to the previous market top, sorry. And we have signs of a bearish engulfing structure with an overbought cluster. Still, I'm not necessarily very confident with this reverse. We do have a signal, so don't get me wrong. I'm definitely not going against it. We do have cycle breakouts in here, and you can see that the higher time frame is breaking in here as well. So these act as a risk limitation for us. If we're in a range, then these attempts to breakouts will fail. Because that's what they do, okay? We don't break in ranges. But in the current perspective, I would say that I've noted that we've tried to break one time. We're trying yet another. First time was not necessarily a failure because value sustained over prices. The overall structure is that we've gone from context to context without making new lows. That is rising the bell of a potential delayed third range boundary pattern, which generally needs to validate by breaking both the context, which we did, and the previous high point in our current scenario. So normally, in order to validate the fact that the third range boundary has been delayed, we need to break this level. And in that perspective, there's a historical resistance over the 50 level. And moreover, that's a psychological level. Just halfway through Bitcoin dominating the market would be kind of a psychological mark to try testing. So Are we going to get there? I don't necessarily know, because I wouldn't bet on that side. More importantly, because we do have attempts to break so far, and we have now closed signals. That's a same thing in here. I've been closed now. The 4-hour chart has closed the earlier candle of today, and that's a bearish engulfing one. So we have the confirmation triangle with a signal, and well, we're above the context. That's why I would say eventually we have a probability of a rare case scenario in which we'll double top out of the same resistance. It is a probability, but I also say that I see hell of a demand with this moving average pointing to the same area above 50 or around 50. So I wouldn't raging call for a huge probability of reverse into the dominance. But let me be real clear, this is the 23% Fibonacci of the overall big move, okay? So are we necessarily going to break this level? I wouldn't bet on that. So cautiously approaching the dominance is what needs to be done, and most importantly, this is where risk limitations will show up. There is uncertainty regarding the dominance, which means this is where traders will have to risk manage into shaded gray areas. So let me dive a bit deeper into this, okay? That's going to be today's topic. There is a question mark over the dominance forecasting, which means we should see some ranges and hesitation regarding major altcoins against Bitcoins. That means we're going to have to study Bitcoin itself, and we're going to study the major altcoins. So we're going to go Ethereum and so on, okay? Though first glimpse of it, we can see that today altcoins are definitely overperforming Bitcoin, but that doesn't necessarily mean this is a sustainable level. That is the question mark we've asked ourselves. Let's try giving it a rational answer, which technicals orientates the probability one way or another to validate a market top on a double top structure, or to assess the fact that these consolidation, short-term consolidation structures are just intermediate move before we head back up to 50 and eventually right up to 52, where we have the 38% Fibonacci cluster, because remember, this is a pullback, okay? We're in a bear trend, so anyhow and anyway, this thing will go lower afterwards. The question is, where do we trade it? Do we trade it across the 23% cluster, or do we trade it across the 38 cluster, okay? This is what we do when we pull back trade. Probabilities tells us that in here, we're on the first cluster with a decent probability to go for the second one, but we don't know, okay? Though we risk manage. All right, I hope you've understood the process so far. So now we go for Bitcoin. And as we can see, Bitcoin on a daily chart, man, that's quite a solid fucking signal. Much better than what we've seen into the crypto total, where we've seen the market was overloaded. Okay, these are the gray dots. So you wouldn't necessarily see it, but there's the gray dot right behind this massive exit pattern. This one is closed. This is yesterday's candle. And today, right by now, meaning that the candle isn't yet closed, 17 hours to go, but we would be confirming the context in here with an exit pattern, which is much better than the taking profits we've seen on the crypto total. But most importantly, in here, we already would have the confirmation with the triangle as of right now's candle state. Moreover, we can see that the algorithm is detecting this as a context, which is freakingly rare, because generally my indicators will rarely give you a signal to detect the second range boundary. It's rarely going to be able to find this one. So this would be the sign of a bullish range for Bitcoin, meaning that exactly is what we've talked about. If this is truly the way we reverse Bitcoin, if Bitcoin made its dip yesterday, man, we're gonna go all-time highs in a straight line. There will be no risk limitation with the trend channel, nor with the context, because that means we have made the entire consolidation in a straight line. In a single straight consolidation, but these are bullish range opportunities in which we would better have a bullish trend signal, okay, which we do not. And normally we're supposed to trade with the trend channel, which we did not. But man, that doesn't necessarily mean we have to. It just means if we have these signals and if we validate them, I can be damn sure I'm not going to risk manage my Bitcoins. I'm just going to let them ride back up to all-time highs. There will surely be some intermediate risk limitations, some sideways action, but I doubt Bitcoin will ever build us a consolidative wave to go search for a third range boundary, for example. I think in that perspective, this bearish move would just have been a fake move into a bull trend before it reactivates. And let me be real clear, looking at the signals we have, I think we're going to go straight line to all-time highs. But that's something we need to validate, okay? So don't overexcite yourself. We still need to candle close this one, 17 hours to go. And we also need to terminate the week, which is definitely not yet there. And the monthly close will definitely matter a lot to orientate these probabilities, okay? The level to get right up to is 41K. If we break this level, you can be damn fucking sure that the bottom is there and that the bulls are raging for blood. And we'll see all about that throughout the week. Then you have to study Ethereum, which is our major altcoins. And that's starting to give us the answer, actually, don't you think? We've seen that Bitcoin has a fairly solid bottom structure pending still, but very solid, much more strong than what we have in here in terms of Ethereum. Ethereum has just given us this, which is an oversold cluster. Okay, these signals have to be traded on the trend channel, so this is exactly what we've had. So what's the current state? And the current status for Ethereum, we've gone oversold, but despite what happened for Bitcoin, we have managed to dip below the rising contexts. So if we pull all these things together, we would figure out that Bitcoin has reversed its context, though it's managed to hold the demand into this context. Ethereum, that has shown much more strength into the previous month, has shown some weaknesses through June. Because in my personal opinion, Ethereum could have rebounded out of the 2200, and they did not. They dipped just like Bitcoin did yesterday. So in that perspective, I'm not necessarily raising some concerns over Ethereum. I'm just saying Ethereum has to show some strength now. We shouldn't miss this, which means Ethereum tried to break out. Not the case for Bitcoin. So we had a cycle breakout attempt, and I would say that this is the level we try to break, which means we have gone to exactly the 1-to-1 ratio, which means this target has been very misplaced. Okay? So in that perspective, Ethereum is exactly testing the deported 1-to-1 ratio over this attempted breakout. So we have no signals on Ethereum, but we have something actually. We have the fact that the market, in a freakingly strong bull trend, trying to accelerate to the downside. Now I want to see the bulls taking control again, and I want to do them fast. Okay? So we'll see all about that, but just like we've stated for Bitcoin, there is a reasonable probability that Ethereum made its dip already, and it has to retrace above the breakout level. So there are two key levels for Ethereum. This one, because this candle is the one that triggered the oversold cluster, so we really want to candle close above, which means we never actually sustained prices below the context, because this is not a breakout pattern. We have a breakout candle followed by doji. If this candle reintegrates and gets the close right above the support context, that means we never actually broke it. We might have settled 1 and 2 candle closes, but if the third one retraces right above with a reversal pattern, that means we've never settled value below. That is something like, yeah, 2100. So if tonight Ethereum succeeds into breaking above the 2900 and sustain the candle close above it, that would be a fairly reasonable sign that Ethereum, just like Bitcoin, has made a rejection of bearish attempts. And in that perspective, let me be real clear, that's not just a tiny bullish signal. That's just a crazily fucking ever bullish signal. Because though we've seen that Bitcoin has shifted value to the downside by reversing the context, and we've seen that if it was on the verge to reverse violently, we could just fuck up this first resistance level on third range boundary, I would do the exact same for Ethereum if we succeed reintegrating this level, and if we succeed with a nice monthly candle close. Because in that perspective, we might have dipped below the context. But let me be real clear, I can't explain everything about the indicators choosing, but there are lots of algorithmic decision that depends on where we'll close the month. And if for some reasons we were to close the month above 2600 or so, this will never reverse the context. which means we might have dipped below the rising context, but this won't reverse it next month. It will keep up rising, which means next Ethereum 50% line could still rise higher, which would increase the demand over these levels. And let me be real clear in that perspective. That means Ethereum just go immediately all-time highs again, probably like Bitcoin would. So do we have reasonable chances to now and for on go from where we are to straight all-time highs? I think there is a reasonable probability to do this in both Bitcoins and Ethereums, but we will have to validate these daily signals, weekly signals by the end of the week as well. And we will depend, and most of this will depend on the monthly candle close as well. We'll study all of this as price prints themselves, and we'll orientate the probabilities and just setting the ground basis. Second option, which is more contrasted, is of course we fail to do these things and we maintain some kinds of an in-between hesitation, which hardly will put the Bitcoin dominance into the current level, but very likely cause Bitcoin to rebound, altcoins to steadily stay into the current price area without going to dip below. I don't think we can. I just think we can stay there for altcoins. And in that perspective, the Bitcoin dominance might eventually head toward the 50-52% layer, which would head us to the 38% Fibonacci cluster eventually. So is it a one battle for altcoins? I wouldn't definitely say that. I would say we need today's candle close to forecast that. So until then, stay safe. Don't be dumb enough to buy altcoins with leverage and putting stop losses below the current low points, because most of them can fail out of doing this. We're going to study some of them, like taking atoms, for example. The structure in here is just a taking profit. So can we dip below a taking profit pattern? Yes, we can. So is this safe enough to put a stop loss on atoms? Definitely fucking no. We can dip below. Nexos token, nice lower shadow candle. Pretty much like Bitcoin, we've reacted out of a trend channel and we haven't even broken through the support context, taking profit patterns. This is fairly solid. I think we're rapidly going to retrace to the average value. Solana, god damn it, I like this thing. We're already at average value. We've tried to break and failed inside the context, not even touching, not even breaking the previous low point, and we oversold the cluster. Look at the cycle, man. This thing is still so bullish that I think all-time highs are on the verge to come sooner rather than later. Ripple has to show some strength, but it definitely fucking does today. We'll see all about that in the future. We need to candle close and we need to risk manage the bearish probabilities, but this is quite good. I mean, man, just look at where the support contexts are. We're so far away from this and we might be showing some very, very weak patterns, but if the weaknesses tend to overstate, well, and if prices were somehow rejecting the bearish attempts, well, boy, that's a sign of strength. So we'll see all about that, but I would call for reactivation toward the average value for your Ripple, and we'll see all about that later. The fact is that I like the overlapping structures in these perspectives, so I'm not definitely jumping off Ripples and so on. I've seen people saying Ripple is dead. I definitely did agree with that statement. I would say Ripple has to show strength, but if it does, man, that is still a solid project. I think it has definite probabilities to go retrace a bit, and then we'll see big resistances out of the current out of the previous low points, and this is the area in which Ripple will have to decide if it goes below, and I will definitely jump off board. Option number 2, we succeed breaking above this level, we will have a tight risk limitation to handle over these, but that's more about it. Okay, so Ripple is much weaker than some other coins, but if it succeeds flushing away these weaknesses, then it will definitely show us some crazy fucking rising in prices. Stellar Lumens, I like the structure as well. This is one of the coins that the algorithms have already detected the reversal patterns. Like I said, algorithms will rarely be able to detect the second range boundary, but they do out there. We are trading out of very, very, very dangerous retracements out there. We've retraced 76% or 75 to be honest, out of the current bull run, which is severe drawdown. And I never thought we would do such a thing, but just look at where the average value is. it's so crazily fucking away from current prices, which means if Stellar were on the verge to violently rebound, man, we're trading 0.26 and we could retrace right up to 0.50. This is where the average value stays, and if we really reject the bearish attempts, this is where we're going. So, are we on the verge to double Stellar prices? I think we could. And to be fairly honest, I haven't reinforced my existing position on Stellar, but I definitely haven't changed my mind about the future forecasting prices for this asset. I still have reasonable confidence that this is a good project that is fairly overvalued currently, just like Atoms are, and this is one of the projects I believe the most in. So we'll see all about that. It has to show some strength. It showed some serious retracements level, which means if the project is still on the horizon and into investors' mind, it has to show huge rebounds in prices. We're so far away from the average value, so if this project's still worth it, we're going to have to retrace right up there and real quick. Cardano as a final example, man, this guy is just so crazily solid. Just like Ethereum, we haven't reversed the context yet, so if we've got a solid rebound, well, all-time highs are pretty much granted already. We haven't even broken a single support. We've broken some trend lines still, but that's pretty much all about it. And this is not a breakout structure. This just tells us one thing. We had a trend line. This is pretty much like this one. Hasn't been broken in here. We tried again, but if we do the same old Morningstar pattern, and if we close above this level today, well, that means just one thing. We're trying to break, we fail, which means next time is all-time high. Again, no resistances for Cardano. This is one of these projects that if it succeeds, pulling away from the bearish attempts we've made yesterday, well, that's just a sign of strength. We haven't even terminated a bearish cycle in here, which means trend followings, and basically fucking up the intermediate third range boundaries will be trend follow opportunities, in my personal opinion. Okay? I just think that just like we stated for Ethereum and Bitcoin already, I think the third range boundary has already occurred. I think we just have a very weird type of range structure. So if it ever succeeds breaking above the 1.90 level, man, I'm going to trend follow Cardano. Okay? I'm not going to go against the others. We're already 26 minutes in. I think you've already understood what my point is. I definitely stand for right now a fairly reasonable probability for the Bitcoin dominance to reverse, because major altcoins are showing quite some severe, strong structures, but they have to close today's candle first. So I wouldn't definitely call on the bullish signals we see right now to be validated by the end of the day. What I would say is that if they ever validate, man, that's a very strong signal for the future of cryptocurrencies. If for some reasons the Bitcoin dominance were to fail, and in that perspective altcoins to go for another dip, which means we fail below the first resistances we might be testing just right now, and if for some reasons we close with more contrasted candles today, well, in that second alternative solution, which as of right now I would be pretty much 50-50 betting on, well, in that perspective, that doesn't mean this is the end of it. That just means we're going to have to wait for the weekly candle close to tell us the story. So, remember the message that's been sent yesterday. You need to look at the candles on a day-to-day basis and wait for the candles to close. If we have a bullish close today, that's a freaking bullish signal. That means the bottoms we've made are now locked in, and you can safely put stop losses slightly below these levels. Of course, don't be dumb enough to put the stop loss right below. Okay, put a bit of a distance in between, but that means if we make bullish candle closes today, we have the bottom. That's not a 100% probability because nothing ever is granted, but that is a severely much that's quite a big probability. Okay, I'm going for like 85% chances not to take your stop loss if you safely put it a bit away from the current low points, but you'll be able to margin trade again, which means you can buy without necessarily holding the entire amounts of money. I would say buy for 1/2 of the position sizing, okay? Like this example, this right now would be 1.30. That means pay for the 0.65, okay? You pay half of the position sizing and the rest of it can be margin traded, okay? That depends on today's candle close. If we fail on today's candle close, option number 2, we're going to have to wait for the weekly candle close to settle for probabilities to set a safe stop loss. In the meantime, don't have a look at intraday candles. They will probably have to risk manage these probabilities on an intraday basis, and that's none of your concern. Okay? Bye, guys.